the smaller economies in Southeast Asia are already contributing strongly, but of course are being held back by outbreaks of the COVID-19 and mutations thereof. This, I think, is one of the most pressing challenges that these smaller economies face. And indeed, I suspect why there is some a broad caution, particularly in the markets, towards them. But in terms of answering your specific question, which quarter, it's a very difficult one to answer, because clearly we would need some clarity on when the COVID-19 is contained and managed.
So, John, in absence of more clarity on that front, I mean, what does all this mean for your investment allocation? Because it seems to me, based on your notes, that you're growing a little bit cautious of a pullback on the cards. But what would it take? I mean, what's that catalyst you're looking out for?
Well, it's a near-term caution. It's one that tactically anticipates some sort of pullback over the summer months. I think that the almost 100% rally in Asian equities between March last year and February this year has priced in an awful lot of good news. If you look at market reaction to first quarter earnings, which were really very good, I mean, the beat ratio was the highest we've seen in 20 years. The market responded over the last 3 months by declining 3%. So my sense is possibly we're exaggerating by saying markets are priced for perfection. But there's certainly a lot of good news priced in. There's a seasonality factor at work. Some concerns, for example, between the Biden and China administration possibly warrant some caution. And my sense is there will be something of a pullback over the summer months, but heading into the second half of this year, particularly as consumer demand picks up, investment demand stabilizes, a greater sense of the inoculation process is rolled out. I'm a little more positive and optimistic.
Okay, so if it's a temporary pullback, then, I mean, would the strategy be to just hang on in there, don't take profits, don't get out of this market, just wait and ride it out?
You know, there's a lot of focus on rotation right now, a lot of focus on trying to position one's portfolio, both at a tactical and strategic level, for some of the winners that we think will become apparent. We are looking, for example, at those commodity stocks that we think will benefit from the global reflation, particularly in developed markets. We're looking at a higher inflation environment, pushing up bond yields globally, and therefore positively impacting the performance of some financials in this particular market. And of course, we're also seeing the potential for important sectors in Asia, such as tourism, to benefit from the gradual reopening of travel bubbles, particularly some shorter quarantine times, and positioning one's portfolio to benefit from that.